So for this session, we will talk about your output VAT and also your VAT on importation. So just a quick recall. Remember before we talk about your different transactions based on your destination principle. We have your domestic sales, your importation, and your exportation. We said that only domestic sales and your importation are subject to business tax. Now we are to talk about your importation subject to business tax and your output VAT based on your domestic sales. So let's start now with your VAT on importation. VAT on importation, this type of VAT is not subject to threshold. If you still remember, before we can say you are subject to VAT, you must have at least sales or receipts of 3 million pesos. Or for franchise rentals of televisions or radio, that is 10 million pesos. So if you meet this threshold, you are subject to VAT. You are a VAT taxpayer. However, for VAT on importation, remember, this is an exemption to the rule of your business transaction. We said before that although you are not undergoing business, you are still subject to a business tax. So whether this importation is for business or for personal use, we still subject it to business tax. Hence, therefore, we will not subject it to the threshold applicable to your VAT. Remember this one, on your importation, it is not important if ever you meet the threshold or not, because once you import, you are subjected to VAT. Next, the consumption tax is paid by the importer, although origin is a foreign seller. Remember the effect of a business tax or a consumption tax. Remember that who actually pays the tax is the buyer. The buyer here is the importer. The buyer here is considered the importer. Now, once you import any goods, it is subject to VAT on importation. Our main problem here only is uh, what is the tax base of that particular importation. But before we go to your tax base and the taxation of an import, we go first on the definition of an importer. An importer is any person who brings goods, of course, in the Philippines, whether or not made in ordinary course of your business. So remember, the buyer is from the Philippines, and the seller is a foreign citizen. Okay, so seller, foreign or made outside, and the buyer is within or in the Philippines. So if ever the transaction is this way, it is considered importation. And remember, take note, whether or not it is made in the ordinary course of the business. Because this is an exemption to our rule on your business. 'Di ba? Sabi natin noon, you can only be subjected to business tax if you are doing business. That's why we discussed what is doing business. However, we also said there that one exemption to that rule is that if ever you are importing goods for yourself or any importation per se. Okay. So we go now to your taxation. So once you set up that there was already an importation, we are ready now to tax it. Okay. So first, to properly know the taxation of a VAT on importation, you should know the tax base. You multiply it to your tax rate and you should pay it already. So again, what is our formula? Tax base multiplied by tax rate. Now, many students seem confused on the tax base. What is the difference between a dutiable value and a landed cost? Actually, they are the same. They are the same. However, they only use your landed cost if ever the goods are based on quantity or volume. And you use your dutiable value if the value of the goods are already given. So again, dutiable value or landed cost is the same. Their difference only is as to the type of the goods given or imported. So if ever the value is already declared, that is the dutiable value. But if only the quantity or volume is given, you use the landed cost. So based on the quantity or value, the customs provide a landed cost out of that particular quantity or volume. Okay, so if the value is given, GTO value. If it is based on quantity or volume, we have your landed cost. So to compute for your tax base, remember this one, GTO value or landed cost. You add your duties. Duties is your custom duties. No problem with this. This is always given. Next, you add your charges. So normally these charges must be the charges prior to the release of the goods from the Bureau of Customs. Okay, so charges are the charges prior to the release of the goods from the Bureau of Customs. Your problem here is what should be included on your charges or what should be included in these charges. So some examples are your insurance, freight, what else? Commission, interest, bank charges, brokerage fees, arrastre fees, wharfage dues, what else? Postage. So those are examples. But take note, guys, you must take a look at the as to the charges. It must be prior to the release of the goods. If the charges is after the release, do not include it. Only include those charges prior to the release. Plus excise tax. For now, since we did not yet discuss what is the excise value or excise tax of a particular goods, I will give the excise tax for the problems. So if ever there are problems regarding importation and there must be an excise tax on that particular good, I will give you the rate for that excise tax and you should add it. Okay? So you should add excise tax on the tax base. So what are the items on our tax base? That is either your dutiable value or landed cost, plus the custom duties, plus the charges. Take note, for charges, you should only include the charges prior to the release of the goods from the Bureau of Customs. And lastly, the excise tax on that goods. And based on the tax base, we multiply it to our tax rates. Of course, our tax rate, 12%. And then you will now pay the tax. So how will you pay the VAT? You pay the VAT prior to the release of the goods from the customs. Why? Because it is a requirement for you to get the goods by first paying your VAT. Okay, so again, tax base, items, dutiable value, landed costs, plus duties, plus charges, plus excise tax. Okay, so let's have an example. A perfume was imported for sale. The following cost relates to the importation. So this is the value, 10,000 peso, $10,000. The freight and insurance is 10,000. The custom duties is 20,000. Your excise tax is 112,000 and your other expenses is 5,000. The exchange rate is $1 is to 56. Normally, the excise tax for a perfume is 20%. That's why you have here an excise tax of 112,000. But anyway, to compute for your VAT on importation or VAT on importation, we must first get for the dutiable value. So the dutiable value is the $10,000. We need to multiply it to our exchange rate. 10,000 times 56, we have 560,000. And then we add your custom duties. So your custom duties is 20,000 pesos. You add your charges. So your charges are freight and insurance and your other expenses. So 15,000 pesos. And then you need to add your excise tax. Our excise tax is 112,000. So how much is our total or our tax base? So our tax base is equal to 560,000 plus 20,000 plus 15,000 plus 112,000. We have 707,000 pesos. We multiply it to our tax rate, which is 12%. 707 times 12% is 84,840. 84,840. Okay, so you just need to know for our tax base. Let's have another example. An importer wished to withdraw his importation from Bureau of Customs. The imported goods were subjected to 10% customs duty in the amount of 12,500 and to other charges in the amount of 9,500. VAT due is, okay, so we have first your dutiable value or your landed cost. You add your customs duty, you add your charges, and you add your excise tax. Okay. Your customs duty normally is based on a percentage out of your dutiable value or landed cost. So in this case, the problem states that the custom duty is 10%, which is equal to 12,500. So our custom duty is 12,500. So to compute for your dutiable value, that is 12,500 divided by 10%. So 12.5 divided by 10% is 125,000. And then heavy charges amounting to 9.5, no excise tax given. Then how much is our tax base? So our tax base is equal to 125 plus 12.5 plus 9.5. So we have 147,000 multiplied by 12%. We have 17,640. Guys, although this is just easy for you kung ganito lang yung problem, but guys, please mag-ingat kayo pagka yung binigay na problem is exempt pala. So you should know the different exempt transactions as to importation. 'Di ba? Remember when we talk about your different exempt transactions, we look into the type of transactions, whether that is sale, whether that is lease, whether that is an importation or an exportation whatsoever. Okay? So you should remember those items. Okay. Quick recap. What importations do you still remember as part of your exempt transactions? Of course, the first one, the agricultural and marine food products in their original state. Another is your livestock and poultry yielding foods. You also have your breeding stock, your importation of breeding stocks. Also, your importation of fertilizer seeds and your fingerlings used for those agricultural produce. What else? Importation of your personal and household effects. And then we have another importation of professional instruments, if you still remember, direct farm inputs, machineries, and equipments, importation of those items. What else? Importation of your newspapers, magazines, if you still remember. Another importation of those international shipping, what do you call this one? Fuel, goods, and supplies. So those importations, I did not mention all the importation, just a quick recap of what importation or transactions on importation are exempt. Okay? So, if you know already the items that are exempt, pag sinabi ng problem na ito yung in-import niya, huwag kayo basta-basta mag-compute. Okay? Kasi exempt siya. Please, ingat kayo. Okay? Although madali lang siya, kasi nga, kukunin mo lang naman yung tax base, i-multiply mo lang, okay na, di ba? Pero ingat kayo pagka exempt good siya. So, alamin ninyo uli yung transactions on importation that is considered exempt. Last example, Naruto imported a car from USA for his personal use. Total cost is 280,000, including custom duties of 56,000. That due is, okay, so in this problem, the 280,000 already includes the custom duties. So you just get the 280,000 multiplied by 12%. So our answer will be 33,600. Okay. So in this case, our answer is 33,600. So again, for your importation, first you need to know if ever that importation is exempt or taxable. Once you know it is taxable, meaning it is not one of those items under your exempt transactions, how do we compute for it? We get for the tax base, we multiply it to your 12%. What are the items of your tax base again? That is your dutiable value or landed cost, plus your custom duties, plus your charges. Take note for charges, only those charges prior the release of that goods on your customs. And lastly, you need to add your excise. Okay? So that is your VAT on importation.